Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, guys. Let's take a look again at the euro currency. So situation stands here is really interesting. Although we were right in general on the direction, as we said in the weekly report that we expect dropping first at 12.45, so OP target next is 11.80 approximately. But unfortunately, action was really very fast, and it was really big challenge with the attempt to take the short position, because the retracement that we have discussed in the weekly report hasn't happened. So actually, market has opened with a gap down, and the immediate breakout has happened on the euro. That's one of the reasons why we talk about the splitting of the position every time. So although we could create really good plan and we could manage and show the very good levels for entry, confidence levels, but retracement not always stand in the market that lets you to take the position. That's why the splitting of the position and entering step by step with the minor part and increasing of your position of retracement still will happen. That's a common solution if you plan the important trade, and that will last for some days probably, or if it stands on the high time frames for weeks. And if the money management lets you to do this, so this is a good solution for possible taking scale in when you can to do this. So what we have right now, market, as you can see, has shown the tail closing with a huge action down. So the volatility and action, actually the drop here one session has increased to almost all dropping that we see here, except maybe this one. So, and this one. So here was approximately the same distance the market has passed with for the one session. So we're very fast volatile action. We have the tail closing, and on preparation to this drop on last week Friday and Thursday also was not quite tail closing, but very close to it. So breakout has happened here. 113 has been broken fairly. So this is not the failure breakout, it's real breakout of this area. Another important moment here, guys, and take a look at market has passed through the OP as it now exists. So it actually has dropped below it, and we see the strong acceleration down here compared to the other legs of our free drive page. That's of course the bearish sign. So in a common sense, when you see the acceleration and the tail closing, long tail candles closer to the target of the free drive, this is the reason to avoid taking any long position when you see it somewhere on the market. But the reason why I think that still upward bounce here is possible, because if you remember in our weekly report, we said that this is, guys, major weekly support area, and area that stands near the weekly oversold. So this will be a hard, rock hard support, and despite the acceleration even on the daily, on the free drive, some pullback here probably will happen. I'm not sure that free drive will complete its target, because as you know, the target of the free drive is taken out of the top between the second and third drive. This is still a question, but some reasonable pullback here, maybe 30% of this most recent leg, it should happen by the probability. Now, why market stop here? I suggest that this is not just by the OP target, but this is due to the daily oversold. So actually, market has passed for the OP target and stopped at the daily oversold, and the oversold currently keeps the price action for the further drop. It means that stop here and pause in this downward action will be very short term, and I will not be surprised if today or tomorrow the market will reestablish downward action and hit this area. Also take a look, that will be not just a weekly major support, but it's also weekly, monthly pivot support one. That being said, on the euro currency, I think that market should show another leg down, and retracement that we see right now probably will be very small. So on the 4-hour time frame chart, I see nothing really special. We have excellent thrust. Unfortunately, we haven't got any brand body trade. You can see here reaction on the OP. So OP has been hit, minor pullback has happened, and you do not see it even on the daily chart. And downward action has followed. It means that that was reaction on OP, and that is stopped by the daily reversal. There are two levels that we could keep an eye on. It's probably 1270, 113 even. Is confidence resistance and previous low stands here. Also, it could become the brand body sell, but somehow, guys, I think that hardly will get today this retracement. It's more probable that market will show just minor pullback. It's 1270, 1285 maybe kind of the minor pullback, because this is just a stop due to oversold, and no real targets have been hit, or better to say, it's already have been passed. Now market's gravitating to the 1180, 1185 area. On the hourly chart, we probably could keep an eye on the harmonic retracement swing, so you can see your currency keeps it very well. Here, in the first harmonic swing already has been done, but since we stand that they were sold, probably we could count on another one, another harmonic swing to the upside, and this will be depending on from what point it will start. I just approximately put it here. It's probably some minor leg could be formed. Kind of the ABC pattern we could get, as I said, so 1270, 1285 area is more probable. This will be the final point of the retracement. If we will get here nicely looking Gartley's triple to sell, that will be the opportunity for take the scalp short trade with the 1180, 1185 target. Also take a look, we have another OP here, it's 1187, based on this ABC top pattern OP. Initially, if you remember, we have this minor pattern ABC, but this market has exceeded the XOP to the downside already. We need to increase scale, and that's why we use the larger scale ABCD pattern here. So that's what we see right now. We think just in two words as a bottom line, pull back somewhere to the 1270, 1285, and downward continuation to 1180, 1185. So if you will think about taking the short position here, move your stop, keep your stop above the confidence resistance on the 4-hour time frame chart. So it should be somewhere around 1325, above 1325. That's our trading plan for a few sessions.